Welcome back. Continuing with corporate conversations, and Mindspace REIT is the next management that is joining us to discuss the quarter gone by and the outlook going forward. Ramesh Nair, the CEO, is joining in. Ramesh, good afternoon. Thank you for joining in. Your revenue from operations were up around 7.5% from last year. Now, can you break down the key drivers for this growth? And do you expect this 7.5% to say around about 8-10% revenue growth trend to continue going forward as well?
Thanks, Vivek and Hormaz, for having me on the show. If I rewind back 1 year back, what are the big concerns about REITs? First was distribution growth. We have fixed it. We have shown distribution growth of around 11%. Price appreciation, I was just checking the numbers. Last 12 months, our appreciation has been 17%. You add dividends of around 6%. So we're talking of a product which is around 23% in terms of total returns. SEZ vacancy used to be an uncertainty a while back. With the government allowing flow-wise demarcation, that's behind us. Work from home, which was a challenge 2 years back, that's again been fixed. In a portfolio like ours, what we're seeing is almost all our parks are more than 75% plus attendance. Back then, I remember when the government change had happened in Telangana, there was also a concern if there would be any worries regarding the overall political continuity in terms of stability, which we have seen because Hyderabad again has seen record numbers in terms of office leasing. So overall, the market is looking phenomenal. The leasing numbers are through the roof. Market is every quarter, when I read the IPC reports, I see new records being broken again and again, both on net and gross leasing.
Mr. Nair, that gives us very good perspective to ask our next question. So currently, what is the total lease or total area under leasing? FY26, FY27, what is the proportion of area that will be added on? Can you also help us with a DPU guidance? We understand that you are regulated, to give out 90% of the proceeds. But what is the kind of guidance that you are going ahead and helping investors with? We understand that with higher leasing, you will be able to give out a higher dividend payout.
So right now, our occupancy is 91.5%. By end of this financial year, which is March 31st, we hope the occupancy will go up to around the 92.5 to 93% mark. We are quite confident that we will start seeing distribution growth happening. We typically don't give guidance on distribution. We're also looking at a ROFO asset. We are looking at a third-party acquisition. Any acquisition we do will definitely be a strategic milestone for us in our growth journey. We are still looking at expanding our footprint in the key markets, committed to invest in high-quality, premium potential assets. And I think this ROFO and this third-party acquisition will be a step in the right direction.
What about data centers, Ramesh? Your delivery of your second data center in Airoli was well ahead of schedule. What's the expansion plan in that space, and how much of a contributor to your business do you expect this to become over the medium to long term?
So what we're seeing in the country is every year we are seeing around 250 megawatt of capacity addition in the country. For us, we are extremely well placed to capture the demand. We have 5 data centers in our portfolio, out of which 2 which has already been delivered. These 5 data centers would be 285 megawatt capacity. This is also 1.7 million square feet of our portfolio. It helps us because we have long-term leases. It helps diversify our tenant base. It helps diversify our tenant risks involved with tenants. These data centers typically give us longer lock-ins. We're very happy to have delivered our second data center, 315,000 square feet, 2 months ahead of schedule.
Right. Mr. Nair, a couple of quick questions. First up, what is the current debt level? What is the level of debt you will take on to go ahead and make these acquisitions that you spoke about. The other question is, at the end of FY25, how many leases are expiring? Have there been any that have already been renewed? And are these happening at higher tenancy rates?
So our current debt is around the 7,000 crore mark. Our LTVs is at a very healthy, lowest in the industry at 22.6%. We would be doing these ROFO acquisitions and third-party acquisitions mainly through debt. In a portfolio of our size, we have close to 35 million square feet of 27 million square feet is ready and completed. What we typically see in a year is 2 to 2.5 million square feet of leases which come up for expiries. We try and see if we could get at least 50% of them to renew, and the balance 50%, we try and get newer clients. Many a times we've seen that when some of the clients who signed up long back, maybe 9 years back, 10 years back, when the markets weren't as hot as it is right now, when some of these tenants leave, it gives us those mark-to-market opportunity. Just in this quarter, the quarter we just got over, re-leasing spread was 26.4%, which means when a tenant vacated us and we gave it to a new tenant, we were getting 26% more rental. So in a portfolio of this size, tenants vacating is part and parcel of the business.
All right, Ramesh, thank you so much for sparing time and joining us. Wish you good luck for the rest of the year as well. That is the management there of Mindspace Business Park REIT, the stock doing fairly okay in a market that is otherwise full of red on the screen. By the way, numbers from ACC were just reported a few minutes ago. The third quarter volume growth at 21%, which is the highest ever that it has reported in a quarter, is for ACC. So that's the big number to watch out for in terms of ACC, the volume growth figure. The stock, though, continues to remain choppy, around 1.5% lower as we speak for now. The revenues also includes a grant of 720 crore compared to a 59 crore grant that has come in the base quarter. Other income too has seen a substantial surge that has aided the bottom line, and that is also because of a favorable income tax order that has come in for the company. So numbers from ACC to watch out for, the stock looking to recover from the lows of the day. But with that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the team that put the show together, thank you so much for watching. Your stocks and a slew of other earnings on the other side.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.